I think there's certainly concern over the very uncertain economic environment we have. I think if you look at the measures on trade, I think that's concerning for most businesses. I mean, think about it. Trade is 3 times our GDP. Trade is literally in our lifeblood. And an open, rule-based multilateral system is the kind of oxygen that keeps us alive. And the free trade agreements are like our blood vessels. So all this global drift towards a more industrial interventionist policies, particularly in the major economies, can't be good in the long term for a small economy like Singapore.
Do you worry then that the last NODX number, exports down 8.7% in June, is a shape of things to come?
It may well be, so it will depend really on whether there's an uplift in the overall global semiconductor industry as well as in the flow of trades and services. But I think on the whole, what we are really concerned is that, with this global shift in supply chain, whether the many gains of the globalization that we have obtained over the years will be eroded over time.
These trade restrictions, Mr. Kok, seem to also have a bit of a political tinge on it, and we're seeing that there's rising rhetoric from 2 of the major economies in the world to try to raise tariffs, to raise trade protection. What additional headwinds that provide a city-state like Singapore that might be seen as rather small in terms of against these growing headwinds?
So we are watching this with great concern, but in the short term, I suppose, in the long term, it's not good for Singapore. But in the short term, there still are opportunities, especially as companies relook at their strategy to look at China Plus One, looking at reconfiguration of supply chain. The key is how can Singapore play a keynote now in the reconfiguration of the supply chain. I'll quote you a figure, right? There's a EU Chamber of Commerce and China Industry survey that ASEAN as a whole is becoming a destination of choice for many Chinese companies. The most favorite destination is actually Singapore and followed by Malaysia. And you're starting to see this playing out, right? There are more Chinese companies coming to Singapore looking for opportunities. US-based Global Foundries has invested $1 billion to expand their plant over here. So in the short term, there are some of these opportunities that I think we can benefit from it.
The MAS said that they enacted a number of preemptive measures to tighten the settings around the Singapore dollar, the preferred policy tool of choice. And we've seen the Singapore dollar, while it's weakened quite a bit, it hasn't seen a similar tumble as some of their peers in Southeast Asia. I'm curious, has a stronger Singapore dollar, relatively stronger Singapore dollar, been a boon or a bane, actually, for some of your members of the Singapore Business Federation? I
think a stronger Singapore dollar has certainly, allowed us to bring in things cheaper. So being an open economy where we rely a lot on imports, I think a stronger dollar helps. But of course, for companies looking at exporting, I think it's been pretty challenging, which is why we're encouraging companies to also see how they can look at expanding overseas while maintaining some HQ services over here. Okay. And companies are responding to that call.